In this presentation, we will take a look at multiple choice questions related to financial statement analysis, going through those questions and then practicing test-taking skills with them. First question, most common tools of financial analysis. A, financial analysis, profitability analysis, transactional analysis. B, journal entry analysis, variance analysis, financial analysis. C, horizontal analysis, vertical analysis, ratio analysis. D, horizontal analysis, financial analysis, fair value analysis. Or E, liquidation analysis, vertical analysis, horizontal analysis. Okay, let's go through this again using the process of elimination. Most common tools of financial analysis. So what do we use? Most common tools for financial analysis. We're considering, usually thinking here, financial statements. What do we use as tools to use those financial statements for analysis tools? A, we have the financial analysis, profitability analysis, and transactional analysis. Now, of those, the one I would expect to see most would be some type of ratio analysis. And so financial analysis, we probably have that, might indicate ratio analysis, but I don't see any reference to ratios here at all. So that I would think it's not A. B says journal entry analysis, variance analysis, financial analysis. And again, it's got financial analysis, which might be ratios, but I don't see any ratios. Variance basically means a change, the difference analysis that could be used. Journal entry analysis is something I don't really recognize as something that we would use on the financial statements. Those are tools to help us to generate the financial statements, the journal entries. Typically, for example, the investors probably don't know what journal entries are, or debits and credits would confuse most people that aren't actually making the financial statements. So probably not B. C says horizontal analysis, vertical analysis, ratio analysis. Now this one has ratio analysis in there. That's the primary one I would expect to see. So I would think C's at least on the board. D says horizontal analysis, financial analysis, fair value analysis. So the horizontal sounds like something I've seen. Financial analysis is in a lot of them. So you're starting to think that that's going to be relevant, but it seems too general of a term. And then the fair value analysis, it's possible. I'll keep that here for now. E says liquidation analysis, vertical analysis, horizontal analysis. And again, I don't see any ratio analysis, and I don't see the financial analysis, which is in all the other ones, which is the only reason I would keep D. So vertical analysis, horizontal sound familiar. I don't really recognize liquidation analysis, so I don't think it's going to be E. Let's keep C and D. Let's go through it one more time. Most common tools of financial analysis, either C, horizontal analysis, vertical analysis, ratio analysis, or D, horizontal analysis, financial analysis, fair value analysis. Now, the reason I kept D is because financial analysis seems to pop up everywhere. Fair value seems like a decent term, and horizontal is something I recognize. So horizontal is also up here, so that's not going to be one of the differences. Ratio analysis versus financial analysis. I think ratio analysis is the proper term, and vertical analysis, if horizontal analysis is one of them, vertical analysis should sound familiar. That's the other thing we typically use. So if horizontal is down here, you would think vertical would be one of them as well, and it is up here. So I think we can cross out D and say that C is going to be our final answer. Most common tools of financial analysis, C, horizontal analysis, vertical analysis, and ratio analysis. Next question. Comparison of financial performance across time is A, horizontal analysis, B, vertical analysis, C, ratio analysis, D, financial analysis, or E, liquidation analysis. Let's go through this again using the process of elimination. Comparison of financial performance across time is A, horizontal analysis. That would seem kind of reasonable. We're going across time, so horizontal. B, vertical analysis. That's another one of the three tools that we just said we use, so I'll keep that one for now. C says ratio analysis. Again, that's one of our key tools that we typically use. So those are the three tools. D says financial analysis. That's one of the ones that kept popping up that doesn't seem to be an actual tool. It might be a broad kind of thing that we could use for financial analysis, but the tools are actually A through C, so I don't think that would be too broad of a term. And then E says liquidation analysis. And that doesn't seem right. Liquidation would be when the company's closing. That doesn't seem correct. So our three tools are A, B, and C. Let's keep those. Go through it again. Comparison of financial performance across time is either horizontal analysis, vertical analysis, ratio analysis. Now remember that ratios, the vertical and horizontal, actually take into consideration some ratios, but the ratio analysis are usually those defined ratios where we're picking and choosing specific items within the financial statement. So we might have some that are going to be comparing across time, but that's not necessarily the case. You know, it's just going to be whatever ratios that we think are going to be most appropriate for whatever we're trying to determine. And the vertical analysis means we're going to be vertical analysis within the same time period, typically. That means that horizontal analysis looks like our answer here, final answer, comparison of financial performance across time is A, horizontal analysis.